going to start broadcasting on the other channels, and we're going to record also. Now that is tra-la-la. That's working. Bloody jolly good. Here we go. All right. So we're going to take a look at Pfizer, and then we're going to take a look at Wolf. OBS is currently active. All streams recording will be shut down. Are you sure you wish on to exit? No. All right. So let's get out of there. Bloody jolly good. Let's do this. Let's start out with Delta Airlines because it's sitting right there. We actually bought some Delta Airlines this morning because, it just looked good. So let's go over it, and I'll show you what I think looks good because this was the last trade I did today. That was this morning. I don't even know when that was. All right. Now, Gabriel, I'm going to take a look at Wolf. We are going to take a look at Pfizer, so sit tight. Now, anytime I look at something before we even get started, let's say hi, hello, all that kind of nice, neat stuff. Who do we have over here? I pulled 41 years old. Big money wad. All righty. Cool beans. Take a lot of Western Union. Okay, not 100% sure what that means, but all right. My name is James. Dividend. That's Stock Talk, where I invest in dividend stocks for weekly cash flow. Goal. What I'm aiming for is a simple, safe, predictable, consistent 1% per week. And I know it doesn't sound like a lot, but here's the thing. 10 minutes a day. That's about what I spend on my own personal account. 10 minutes for 1%. So if you add it up, 10 minutes a day comes to less than an hour a week. And an hour a week to make 1%. It may not sound a lot with your accounts, but at my account, 1 hour a week is about $1,500 an hour. Well, that's pretty damn good if you think about it. Because you stretch that out throughout the whole year, that is over 50% per year, which I'm perfectly okay with. I'm perfectly okay living with 1% a week, which is 50% per year. That works for me. Yes, Mr. Clean, I'm aware Western Union is a dividend stock. We'll take a gander at it in a little bit. If you sit tight, hang out. I got 9 channels that I am broadcasting on. So that means I have 9 sets of questions. Now, the nice thing about the 6 screens I got up top, the screens on the bottom, I can't see those. So I feel bad for those guys because I really can't talk to them. We have a question over here. Mr. N, what are you doing? What we have? Ooh, cool question. We go. All right. Greetings from Ohio. All righty. NV10. Hey, James, can we please get the YouTube horizontal channel when you get a chance? Thank you. Okay, I just got it. All right. That being said, let's get started. Now, some of you may not know who I am. Some of you may be new here. Let me just briefly inform you. In 2008, my 9-year-old daughter says, "Daddy, what are you doing?" 9 years old. Little girl. Daddy, what are you doing? Can you teach me? Imagine that. Hearing from your 9-year-old daughter. No, not can we go buy a bunny. Not can you buy a new dress. Not can we go get my hair and nails done. No, nothing like that at all. Can you teach me how to invest in the stock market? Well, imagine that. 9-year-old little girl wants to learn how to invest in the stock market. Okay, so as a dad, okay, I had 2 boys, 2 girls. So yeah, let's see what you got. So for a 9-year-old, it has to be simple, safe, predictable, consistent, and no way for her to lose. That's the 5 criteria I had overcome with my 9-year-old daughter. So how do you teach a 9-year-old? Well, you get to not 5 criteria: simple, safe, predictable, consistent, yada, yada, yada. Now we need 5 rules to go along with it. Well, rule number 1 is if it's not on the list, it's a definite no. Don't even bother looking at it. I check every single week. This week there's 10,443 some weird number. Different companies you could invest in. Now I check every week to see what the number is, because they add new companies every single week. All right, fine. 10,443, whatever it is. It's a crazy number. But for a 9-year-old, rule one, if it's not on the list, don't even bother with it. Now, I'm going to talk about the list in a few minutes, but let's just go over the rules. If it's not on the list, don't even think about it. Now, for you guys in the audience tonight, considering my 9-year-old is now 26. Is she 26? Yeah, she is. Holy cow, she's 26. Holy cow. It didn't seem like that long ago, does it? Anyway, so for you guys, if you don't want to own the stock for a very long time, don't buy it. If you don't understand who they are, what they do, how much they make, the dividends, the book value, the financial, if you don't know those, don't buy it. Never buy something you don't understand and you don't want to hold on to. Rule 1. Rule 2, it's a simple one. Never sell at a loss. It defeats the whole purpose of the game. And yes, it is a game. It's an adult game with adult consequences. It means you can lose money. And I tell people all the time, the most money you're going to lose is the most silliest and craziest one you can think of. You're going to lose money by hitting the wrong button. Alexa, off. Does anybody actually say thank you to Alexa? Thank you, Alexa. Anyway, you will lose at first by hitting the wrong button. Isn't that crazy? A lot of you are thinking, I ain't going to do that. Hate to be the bearer of bad news. I've been trading for over 30 years. Four times this year, I hit the wrong button. Okay, so it does happen. Even for us traders. Now, I consider myself a seasoned trader. I've been trading for close to 30 years. So anyway, besides the point. Okay, simple. Say, wait a minute, where did you did that one? Never buy something you don't want to hold on to. Never sell at a loss. Rule number 3 is a big one, but a lot of people ignore it because they got caught up in that shiny object crap. They're talking about it all over social media. They're talking about it in the news. It has to be good. No, hell no. Go take a look at the financials. Numbers don't lie. Find a financial website. I use Yahoo Finance. I go take a look. What are the reported numbers every single quarter? Are they consistently profitable? Rule number 3. There's over 10,400 different companies to invest in. Why? It blows my mind. And they do it every single day. They say, James, what do you think of this? I said, I wouldn't do it. It's not profitable. But they do it anyway. Fine. Okay, the money's got to go from somewhere to somewhere else. Okay. Rule number 3, make sure the company is consistently profitable. Me personally, I like 2 decades of profitability. Well, the stock market's over 400 years old, so I don't think 20 years is a lot to ask. There are a couple of companies that are over, there's one company that's over 200 years old, still trading in the stock market. 200 years here in the U.S. There's a whole bunch of companies that are over 100 years old that are still trading and paying dividends. Great, I love those. Rule 4, weekly options only. Because if you've seen the title of this show, Dividend Investing for Weekly Cash Flow. So you got 2 choices when it comes to weekly cash flow. You need to find something that trades on a weekly basis. Weekly options. They trade every single week. Or sit in front of your computer staring at this thing all day looking for opportunities to jump in and jump out. I have no desire whatsoever to sit in front of my computer. Now, contrary to what you may be thinking, I turn my computer on about quarter to 9 in the morning. I do my morning trading group because we have a paid morning trading group. I'm not going to try to sell you anything. Don't worry about that. I'm not going to ask permission. Hey, is it okay if I sell you something? No, I'm not going to do that at all. I'm not going to try to sell you anything at all. I'm just letting you know. I sign in on my computer at 9 a.m. in the morning. Well, about quarter of. Get everything warmed up. Get all the computers running. And then I do my morning trading group. Okay, after we usually done around 11:30. Okay, 11:30, we're done. Because, they like to ask questions and whatnot. But after that, I go directly to my calendar because you, got 9 platforms, you all have the opportunity to go to my website and sign in for a personal one-on-one phone call with me. I have a little calendar app. So after I do my morning trading group, I go to my calendar app, and whoever's on the list for me to call today, I call, talk to them 15, 20, 30 minutes, whatever. And then from there, I turn the computer off, and I don't turn it on again until about 8:20 p.m. because then I got to turn on all the monitors, turn on all the cameras, blah, 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 and get ready, send out the invites, all that nice and fun stuff. So I'm not on my computer as much as you think. Oh, I got way sidetracked. Squirrel! Yes, I have to admit I have ADD, which means I have a very challenging time concentrating and focusing. I do. Okay, I admit it. One of my downfalls, I get it. Rule number 4, weekly options only. Rule number 5, make sure all the numbers work. Now, we're actually going to do a couple of trades so you can see how it's done. Now, if you didn't know, and if you're new, the screen behind me, uh-oh, what did I do? There it is. This screen here is live on YouTube. So you can see all these little tiny numbers. You probably can't see them on your phone or your iPad. But if you're sitting there on your comfy couch or your recliner in the living room or wherever you have your big screen TV, sitting there comfy, you get a phone in one hand, you listen to what I'm saying. You can watch the big screen TV and you can see all these little tiny numbers. Can't see them on your phone. I do it so it makes it easier for you to follow. And it is currently being recorded. Okay, so I get the question every once in a while, is this a recording? No, tonight. See, the funny thing, hold on. Tonight, 9:06 p.m., 9/29/2025. Okay, today's the 20th. Wait a minute. Today's the 29th of September, and it is currently 9:06 p.m. So as of this moment, this is not a recording. But the next time you see this, it will be a recording then. Okay, it's being recorded now. And tomorrow you can log in again, and it'll be a recording. All right, anyway. Besides the point. So yeah, this is being recorded. If you want, you can always go back to YouTube, the10minutetrader.com on YouTube. You can check it out. It's been there for about 15 years. My oldest video, I believe, goes back all the way back to 2012, I believe. Yeah, there's about 1,200 videos for you to choose from. They all basically look the same. Me standing in front of the computer saying, hey, hi, ho, ho, all that kind of nice, deep, fun stuff. So that's the 5 rules. We are going to take a look at a few trades so you can actually see how it flows. Now remember, simple, safe, predictable, consistent, 1% per week. That's what I'm looking for. So let's get started. We have a couple of people already thrown out a couple of things. True talks. I like that. All right, Mr. Clean, my bad. Okay. Yeah, just chill. Okay, I got 9 different channels. You're on channel number 2. Okay, channel 2, 3, 4, 5, 6, and let's get going. So channel number 1, okay, I see, got it. All right, it's good. Channel 1 is good. Some of your recent viewers haven't joined your fan club. You can try setting heart me as your live goals. Welcome your new viewers to help you. Oh, okay, cool. That's just something that you can try to co-create to make your life fun. Yeah, I don't let more viewers get you. I don't mind co-hosting at all. That just pops up on the screen. I read it. I don't mind co-hosting at all. If somebody wants to jump in and co-host, but I don't do it for strangers. Okay. Now, if you've been here for a while and I know who you are and we have actually talked, I have no problem whatsoever inviting you on. Say, hey, what's your take? What's your input? And in a couple weeks or a couple months, we're actually going to have a phone-in line. Okay, and I'm going to actually have a producer who's going to be on the other side of my screen. You won't be able to see him, but I will. And he'll be filtering out all the questions, get to the really good questions, so we can look at more stocks, get more information, rather than having me read all these questions over and over and over again. Okay, so what do we have here? So I'm going to stop this one here. Where were we? Okay, right there. Okay, leave that one there. Leave that one there. Leave this one. Where was it? Nope, not there. Not there. I got to go all the way back to where it was. Where was it? Uh-oh. I can't find it. Wolf, there it is right there. Okay, so it's already up on the computer. Let's take a look at it. It's the very last trade I did today before I turned my computer off. Delta Airlines. All right. Now, anytime I look at a stock, it's always 1, 2, 3, A, B, C, paint by the numbers type scenario. 1 red, 2 blue, 3 green, yellow, white, whatever. by the numbers, step by step by step. Step one, remember I told you if it's not on the list, it's a no? Well, the list is number one. You have to find a good list of stocks that you like. Don't worry about what I like. Okay? What you like. Now, think of it as if I was going to buy this stock and I'm going to hold it for the rest of my days or until it hits my target. Because I want to jump in, I want to jump out with my profit in, make my profit gone. See this right here? Up, down, okay? I want to get a profit, I want to get rid of it, I want to jump in again, get another profit, and I want to jump back out again. Because that's all stocks do. They go up, I take my profits. They go back down, I get rid of it and wait for it to hit the bottom again. That's all they do. Up, down, that's it, that's all. Do not expect them to come to your house and take your dog for a walk like I did today. I was waiting all day. Pfizer never came over to take my dog for a walk. Anyway. Step one, find a good list of companies that you like. Now, for me, this is what I'm going to tell you that I like. I like the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Those 5 lists, you can go to Google and put in Warren. Don't get old. It's not as much fun as they make it sound to be. I have found in my days, the older you get, certain things don't work like they used to. It's like when you're in your young days, everything works perfectly flawlessly. You don't even think about it. But as you get older, things just don't work like they're supposed to. Anyway. Go to Google. In a Google search, Dividend Kings list 2025, and boom, it just shows up. Warren Buffett's stock list 2025, and it just shows up. Okay, it's magic. It's like, ooh, that's awesome. Okay, so that's the 5 lists. So 5 lists: Dividend Kings, Aristocrats, Champions, Contenders, and Warren Buffett's list. That will give you about 300 companies that are consistently profitable. You can add whatever you want. Okay, Chipotle doesn't have dividends, but people like it. Google. It's not on my list because they only have 2 years of dividends. And that's not on my list. But some people like it. Some people like Apple. Apple doesn't have 20 years of dividends. But it's on my list because it's on Warren Buffett's list. There's some stocks that aren't on my list that are on Warren Buffett's list, so I just use those. All right, so that being said, Step one, come up with a list of stocks that you like. Now remember, these stocks are companies that you would buy, no problem, no questions asked, just because they're good companies, they're profitable, and they share their profits. Because there are only 2 different companies. What is that? BP! Woohoo! Thank you. Two different kinds of companies. One will share their profits with us. Those are dividend stock companies. If they're profitable, when they're profitable, they share their profits with us. We're the investors. So we're entitled to a portion of the profits. Company number 2, Cincinnati's. Woohoo! Yay! All right. Company number 2, they take all their profits, put it back. Oh, BP hit me up with another one. Take all their profits, put it back into the company for capital growth, so the stock rises faster. You got to decide, what do you want? Do you want capital growth, where you buy a stock and it just shoots up over the years? There's nothing wrong with that. Nothing at all. You're in the wrong place if that's what you're looking for. That's not what I'm concentrating on. It's not my focus. JMFF. Ooh, that was nice. All right. That's not what I'm looking for. I'm looking for simple, safe, predictable, consistent 1% per week. I'm looking for cash flow. And the only way I'm going to get cash flow is by a company that offers a dividend and offers cash flow. Okay. So that being said, let's progress forward and let's start looking. So rule 2, step 1, come up with stock list. Step 2, take all your stocks. This is what I do. You can do whatever you want, but this is what I do. Because it makes it easier. I take all the stocks that I like and I throw them into the calendar. I like this pen. This is neat. Pen, this is neat. So I throw them into the calendar for one reason and one reason. Well, number one, they're all good companies, and I'd like to buy every single one. I can't buy 300 different companies. Just can't do it. I mean, I could if I bought, like 1 or 2 shares of each. But no, I ain't going to do that. Here's the thing. each company that I like, majority of them pay a dividend every 90 days. Okay, there's 12 months in the year, 365 days, 266 trading days. Each quarter, four of them, January, February, March, April, May, June, July, August, September, October, November, December. Tomorrow, is today Monday? Yes, today's Monday. Tomorrow's Tuesday. So Wednesday is the first day of the fourth quarter. So here's the thing. Each quarter has 13 weeks. So if I take these 300 companies, throw them into the calendar. I should go like this. Throw them into the calendar. Because see, what you guys can't see is I got a big screen here, and I got another big screen right there. I got a tiny screen right there. So the computer's right there, the keyboard, blah, blah, blah. But the big screen, it's got to be at least 60 inches right there. But I still need my glasses. It's 5 feet away, and it's a 60-inch TV, and I still need my freaking... Getting old sucks. It does. 5 feet away, and I still need glasses to see that damn thing. The only way to get it bigger is going to be like a projector on the whole wall. Anyway. Where was I? See what I mean? ADD. Oh, squirrel. Check. The reason why I stick them into the calendar, because they're the 13 weeks, week 1, week 2, week 3, week 4, so on and so forth. We are currently in week, well, it's kind of weird, because we're at the end of the quarter, which is week 13, and the beginning of next quarter, which is week 1, which is kind of weird. So is this week 13, or is this week 1? Is what it is, right? Okay, anyway, here's where we are. These are all the companies that are paying a dividend this week. So if they're paying a dividend this week, why would I want to look at these? Because they already paid their dividend. Now, here's the reason why I put them to a calendar. Stocks have a tendency to go up in value the closer they get to the dividend. Because the dividend is the portion of profits that they share. And there are a lot of people like me out there that are relying on dividend income. So they buy the stock just to collect the dividend. Who came up with that one? David, Hume, Costco? Yeah. Out of my price range, dude. Any stock that costs $900 a share, no thanks. It's like AutoZone's, over $1,000 a share. No, I'm buying it, I'm turning around and reselling it. So I don't want to spend that much money. Hopefully, next quarter we can get Putin to cease fire. Okay, don't do politics with me, because I got to run on down what do you call it, rabbit hole for hours. Sir, you need to mirror your screen. Hey, the hermit. Thank you very much. Every single night, at least 2 to 3 people tell me that exact same thing. However, when I ask them, do you know how to mirror the screen on YouTube, nobody has come up with an answer yet. So thank you for the observation. You're 100% correct. The screen does need to be mirrored on YouTube and Twitter. Unfortunately, I have no idea how to do it. And technology is not my strong suit. If it was, I'd have one camera broadcasting out to all these channels. Not 7. Okay? No, someone told me, hey, take a phone, go to this app, press live, and just stand in front of the camera and just talk. Well, that's easy for somebody like me. So I get 6 iPhones, okay? Each one's on a different channel. You press the live, and then boom, you're live to a whole bunch of people. Anywhere between 10,000 and 30,000 people come through these 9 channels tonight, asking questions. So I forget where I was going with that. Let's get back to the calendar. So if I want to collect the dividend, this company here, I have to buy it before what is called the EEX dividend date. There's 4 dates to remember when investing in dividend stocks. Date number 1 is the announcement date. That's right here. That's where company representative says, hey everybody, my name is James. This is dividend stock. This is how much money we made. This is how you're going to get your share. How much we made. How much you get, and when you get. Blah 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 blah. It's the announcement date. That's where they step in front of the microphones down the camera and say, hey, this is how much we made. This is what you're going to get. It's the announcement date. That's all that is. Number 1, the announcement date. Number 2, the important date. Number 2, that's the EEX dividend date, represented by these little green circles. Okay. little green circles represents the EX dividend date. That is the last day the stock trades before the dividend is paid out. Why is that important? Because Campbell Soup right here, the 2nd of October, which is next Thursday. No, wait a minute. That's this Thursday. They're paying a dividend. I want to collect that dividend. I'm going to buy it before this date. The 1st, the 30th, the 24th, the 18th, the 11th, the 2nd, the 4th, whatever. Before that date. Number 3 is called the date of record. Whoever owns a stock on the date of record is the person who is entitled to that dividend. That's it. Date number 4 is the pay date. That's when you actually get your money. So the reason why I want to catch this dividend, I got to buy it before. I want to catch this before the EX. Now, this usually go up in value. So when do I buy 2 weeks before? Hey, 1 week, do on a Monday. Always on a Monday. Because I like doing what's called a covered call. I sell time. I sell call options, which allows someone to buy from me at a certain time, by a certain date, for a certain price. That's what a stock option allows them to do. Now, for that, I collect a premium. That premium is usually 1% or more. It's a little warm in here. That ought to do it. So, Cockster, woohoo! Thank you. So that being said, after that, step 1, find your stocks. Step 2, throw them into a calendar, because that will tell you when. Step 3 is take a look at the list. So this week's list right here. All right, fine. Well, let's take a look. Now, from there, you go to trade and go to the chart, because I like to look at the 1-year chart first. Okay, so I got my list. My list is right here. Look at this watch list. Okay, there's my watch list. I'll take the watch list and I will go down stock at a. And as I go down one stock at a time, all these numbers fill out also. So it says what fills out also. So it says. If I can do this. Why am I not seeing this? I'm not seeing it. Anyway, I look at my charts every. All right, so let's say, what are we looking at? What are we looking at? Delta Airlines. DAL. Okay. All right. Anytime a stock, I want to see 5 things, and it takes 3 to 4 seconds to see all these. I'm bummed that my version of Thinkorswim doesn't have the calendar, and I have limited access to modify it. James, my assumption would be, if you don't have access to the calendar, more than likely you have either the online version, which no, I don't like the online version because there's a lot of stuff missing on the online version. Okay? Every time you turn on Thinkorswim on your personal computer, your laptop, whatever, it does an update every single time, and it updates, and it is there depending on which version you're using. Online version, yeah, not that great. The downloadable version, mucho bueno, senor. All right, so that being said, 3 to 4 seconds anytime I see a chart. Not 3 to 4 seconds will tell me whether or not I look further into the stock, or I just said, next. Ready? Let's see. 3 to 4 seconds. 5 things I'm looking for. 3 to 4 seconds. You ready? High, low. Where was it a year ago? Where is it now? And then, what's the movement? Up, down, up, down. That's it. That is the last 30 to 60 days. That's the important date right there. So from looking at that, it's not an all-time high. Okay, it's not at the bottom. So fine, we're somewhere in the middle. Lovely. Let's go to the next step. The next step, remember Rule 5? Make sure all the numbers work. Rule 5. Okay, you ready? 5766, 5766, 5766, 5766. It's up there 4 times. That's the big number of the board. That's the last traded number this afternoon. So when the market closed, it closed at 5766. So if I like this company and I want to buy it tomorrow, I'm buying it at 5766. Now, to find the sale price, what do I want to sell it for? If I'm buying it here, I want to sell it for one of these strike prices. So we get 53, 54, 55, 56, 57, 58, blah, 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 blah. So if I'm buying it at 57.66, I'm going to sell it at 58. It's the closest strike price. Now, I'm going to catch a profit between 57.66 and 58. Also, I'm going to collect this right here. 85 cents per share. Now, it doesn't sound like a lot, but you add it up. Okay, 100 shares, that's 85 bucks. 1,000 shares, that's 850. 10,000 shares, that's 8,500 bucks. Depending on how many shares you get, directly related to how much money you have to work with. We're all different. We all have a different amount of money to work with, and we all have a different amount of money to start with. So if I'm looking, got some noise over here. What's going on? Who's making that? Oh, Zoom user. There's no name in there, so I can't really blame him. All right. So those are the 5 things I'm looking for. Once I see those 5 things, then I want to check out the numbers. Okay. 58. 85 cents is more than 1% of $58. Think about it. 1% is all I'm looking for. Stock price, $58. What's 1%? $58. 58 cents. $58. 1%. 58 cents. It's offering me 5. Well, that's more than 58. Hell yeah, I'll take it. So once I figured the numbers, now let's take deep into the chart to see if it is right for the pickings. Right for the pickings. Here we go. A year ago, 51.16. The high of the year back in the late January. 69.98. Oh, let's just call it 70. Come on, 69.98. That's 70 bucks. Now it drops down to the week of April, also known as TS. Okay, if you take a look, almost every stock you'll see will have a bottom this year, the second week of April. That's when the idiot in the big chair says tariffs, 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 and everybody panics and everything just drops. Second week of April. You'll see it in every single stock. Almost every single stock. You'll see it at the bottom. Second week of April. People panic. That's exactly what did. In April, when he said tariffs, 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 people panic. Sold. Drop. Here's the bottom right there. So from the bottom, 34.86, he jumps up to 64. That's almost a 100% increase. Because 34 and 34 is 68. Well, I got up to 64. Not quite 100% increase. Almost doubled between here and here. Close. Very close to double. But anyway, she shoots up. Here's the high. Now she pulls back. What's happening there? The last couple of days. That's what I want to look at. Because this all right here, fine, dandy, lovely. Okay, today's Monday, the 29th. All of this means absolutely nothing. It's history. It already happened. The only thing we can do with it is give us some kind of idea of where do we think it's going next. Well, let me give you some type of a clue. Just a little bit of a clue. It might be right. It might be wrong. It might not make any sense at all. But if the bottom of the year, back in April, is 34, and this thing jumps up almost 100%. Because 34 and 34 would be 68. Well, it only got up to 64. Okay, just a little bit below 100% increase. Well, at 100% increase, people are going to start taking profits, and they did. Look, it started to come down. Now it came down to a point right here where she stopped. Now she's turning around again. Well, what happens? Okay, it goes up to a point. People take profits, and it comes down to a point, and then it turns around again. That's all it does. And it goes up, down, 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 up, down. Now it's going back up again. That's all it does. It goes up, it goes down. People take profits, the stock drops. People start buying because the stock is low, and then the stock goes up. And then it gets to a certain point, and people start selling, taking their profits, and it comes back down again. Then it gets really cheap, people buy. It's a repetitive cycle over and over and over again. Okay, so that's the last few months. Well, let's look at the last 30 days. Now, the last 30 days give an idea of where do I think it's going next. Think about it. Where do I think it's going next? 3 days ago today, last month, we're right here, 62. Okay, we shot up to 64. We dropped down to 57, shot up to 60, dropped back down here to 56. Now we have 2 days to the upside on this bottom right here. That's the 30-day bottom. 2 days ago. Thursday. Friday was higher. Today was higher. Now, me personally, I like 2 days to the upside after a 30-day bottom. 30-day top. 30-day bottom. 1, 2 days to the upside. Now I'll be watching this tomorrow morning because if this thing opens up at 58 or higher, I'm jumping in. Well, because I like Delta Airlines. Number one, I know what they do. I know who they are. Okay, and the numbers look pretty damn good. So for the fun of it, let's do a trade on Delta Airlines so you can see how it works in practice. All right, so we're going to do the 58, so get rid of that. Change this here to the covered stock, and right at the 58, there it is. And I love Thinkorswim. And I think it sets everything. All I have to do is just choose what I want. Well, the stock's at 57.66, so the closest strike price to 57.66 is going to be the 58. So I pick the 58 right here, and then I hit the buy, and I want to buy it. And then it fills this in for me. Now I got to figure out how many contracts I want to do, how many shares I want to buy. Well, we're just going to do one. That way it gives you an idea of what one looks like. All right. After we choose one, we get this order. This is the actual order going to the market maker for the market maker to fill when he's damn good and ready. I mean, that's basically what he does. He goes to his desk, he says, yeah, I'll do that one. Buy one, covered call, DAL, that's Delta Airlines, 100, which is the weeklies, 3 October 25, that is this coming Friday. The $58 call option, that means somebody is going to buy it from me, or they have the right. They don't have to if they don't want to. It's the big distinction. They can if they want to. They don't have to if they don't want to. It's called an option. I can do it and I cannot do it. But they have the option to do it. So they have the option to buy it from me at 58. It's currently at 57.66, and it's bouncing on a 30-day bottom and going to the upside. Well, that kind of makes sense, doesn't it? Okay. So my maximum profit, says right there, max profit, $130. Do you remember the part where I said simple, safe, predictable? Simple, it's a covered call. It's one of the easiest strategies there is. You're buying a stock, you're selling it somewhere else. Well, that's pretty easy. Safe. The covered call is so safe, they say you can do it in your government-sponsored IRA. Isn't that wonderful? The government will allow you to do a covered call in your IRA, in your 401k, because it's a safe strategy. Certain things you cannot do in your IRA or your 401k, but you can do a covered call. Okay? Now. Simple. We already said that. Safe. We already said that. Predictable. I know exactly what I'm going to make pretty close to make before I even do it. $130 per contract. It may not sound like a lot, but just go with the flow here for a second, okay? Okay, everything, it's like a good movie. Everything will come together and make perfect sense by the end of the movie, or by the end of the show. I'm going to get till 11, so around 10:30 we're going to stop, and then we're just going to answer questions. Because I do have 6 pages of questions, and I can't do them all as I'm talking and as I'm showing. So, profit, 130. Well, what is the cost of the trade? What is my investment? Cost of the trade, including commissions and fees, $5,670. So, to figure out my rate of return, I need my calculator. Calculator, come on down. You're the next on. Let's make like an idiot. Okay, wait. Where the hell did that go? Why did that just not pop open? All right, you want to play it that way? All right, you want to play it that way? I'm going to open up another calculator. I'm going to open up calculator. There it is. One. Going to take the profit, 130. Remember? Max profit, 130. Then we're going to divide it by the cost of the trade. Cost of the trade, commissions and fees, 5670. Divide 567. One contract. That, my friends, is 2.29 cents. That's 2 1/3. Think about that for a second. Do you remember when CDs are paying like a 1.5% for the year? Well, this is paying 2.29. That's like 2 1/3 for 1 week. If 1% a week is 50% a year, 2% a week is over 100% a year. Well, 2.29 is a lot more than 100% per year. Now, can you get this every week? No, a lot of people can. I mean, I get like 1.4 every week on average. But that's still pretty good. All right. So 2.29%. Great. I like Delta Airlines. I bought some this morning because I liked it, and the numbers look good, and the chart looked good, and everything was smiling upon me, and the rainbow and the unicorns coming to visit. Yeah, whatever. Okay, so that's Delta Airlines. Now let's get down to what you guys want to see. So let's change this back to here, back to there, back to here, and... All right, Gabriel wanted to take a look at Wolf. Declared bankruptcy. Wait a minute. Wolf declared bankruptcy and wrapped the old stocks into the new bankruptcy, then issued new stocks. That just does not sound that enticing. WOLF. Oh, hell no. Now, the reason why I'm saying hell no, Gabriel, now, you may like it great. More power to you. This thing was less than $1 back in June and July. Like $1. Now it's at 22. No, that's great if you were fortunate enough to jump onto that thing. Look at this. Yesterday, we're here, or Friday. She jumps up, gaps up, and then shoots up like a rocket. Oh no, she gapped up to 18. From $2 to 18. Yeah, that's nice. But how many times a year are you going to be able to do that? Seriously, think about it. 10,470 different companies out there. And you think you can pick this every day or every week? Yeah, that doesn't happen. It happens like, hey, they say the sun shines on a dog's ass every once in a while. Well, it's true. A blind squirrel finds a nut every once in a while. It is what it is. This is not something you can do over and over and over again. Do you remember where I said simple, safe, predictable, and consistent? Well, there's no predictability to this whatsoever. There's no consistency to this whatsoever. If there was consistency, well, people would be rich beyond all measure. To go from $2 to $22 in one day, yeah, if that's predictable and consistent, yeah, people would make a fortune. Okay. Alrighty, I don't know who's over here in the chat making all that noise. iPhone. Okay, so iPhone user keeps coming up with that. Alright, so as much as you might like Wolf, it doesn't fit, and if it's at $1 a couple of months ago, I seriously doubt it has 20 years of profitability to it. So Wolf is going to be no again. There was no last time we look at it, and it's no yet again. All right, so what do we have here? Here we had a couple questions. Snooze! I'm a profitable future trader, so take them off. Yeah, whatever. For sure. Oh, they need a price split, probably. It would be 400,000 for one option. Yep, something like that. I thought it was 4,000 for the option, 100 shares, blah, blah, blah. What's the actual risk of covered calls? The biggest risk you're going to get is hitting the wrong button. As silly as that sounds, just starting out, the place where most people lose the most money is by hitting the wrong button. It's absolutely crazy. So over here, Western Union is excuse me. Western Union. So who won to take a look at Mr. Clean? Mr. Clean, Dad. Over here on camera 2 wants to take a look at Western Union. Now, don't get me wrong, Western Union has been in business for over 100 years. They are consistently profitable. However, October, November, December, February, May. Yeah. I don't do monthly options because the numbers just don't work. It's nothing but a waste of my time just to even look at them. Okay? So monthly option you can do once a month. That's it. That's what monthly means. Once a month. Monthly. That's what the Lee family don't like. Monthly. See, I like profitably, consistently, safely. Anyway, so no, I don't do Western Union because it's a monthly. The numbers don't work, and it's almost impossible to figure out what it's going to be. Okay. This is about 30 days. Down, up, down, up, down, up. It's a good position, but here we go. Look at this. Okay, now tell me where it's going to be in 30 days from today. That's why I don't like monthlies. It's very challenging to see. It's hard enough to see where it's going to be in 5 days. 30 days, look at all that. No, it's not that easy. And the numbers that they're offering you, it's at 807. Okay, 807. The 8 is going for 20 cents. Okay, fine. But it's 807. If you take 7 cents off of this, now you're walking with 13 cents. No, 13 cents on an $8 stock is what, 1.5%? 1.5% for 4 weeks. I like 1% a week. So no to monthlies. All right. It even says monthly options right up on top. Monthly options. All right. That being said, next. What do we have next? K-Van wanted to know why his Harley Davidson didn't come making dinner tonight. Well, I'll tell you why. Let's take a look at Harley Davidson. Harley Davidson. Now, I did buy some Harley. I did. Yes, I did. Yes, indeed. Okay. The high. The low. Where was it? Where is it? Look at this. Down, up, sideways, up, down, up. That's the current direction. 3 to 4 seconds. That's all it takes. So, yes to the next step. Next step, check out the numbers. 28.70. I got two choices, the 28.50 or the 29. 28.50. 60 cents. That's over 2%. Hell yeah. Take 2%. Harley Davidson, it's an American icon. They've been in business for over 100 years also. So let's take a look at Harley Davidson at 29. Well, look at the last 30 days. Well, look at the last 30 days first. That looks about good, doesn't it? 30 days ago, shoots up, pulls back, shoots up again. Okay. Let's find out. So we want it at 29. Covered call. 29. One contract at market, and here's Johnny. One covered call, Harley Davidson, 3 October, 29 call at the market, 67.50, $2,800. Let's find out the rate of return. Calculator. Max 67.50. 67.50 divided by the cost of the trade, including commissions and fees. 28.33. 28.33. Well, what's the rate of return? 28.33. Grand total 2.3. Come on, that's a lovely one. That's a lovely one. Okay. Yep, I have it written down this morning. Down this morning, I did buy some Harley Davidson this morning. Why not? 28. 2.38 is 2.33% for 1 week. If I get 2% every single week, I double my money in 1 year. Oh, hell yeah. Am I going to get it every single week? No. Because if the stock goes up or down, the option price is going to change. Now, if the stock is above 29 this coming Friday, well, someone's going to take that stock away from me, and I'm going to get all my cash back. I get all my 28.33 back, and I get to keep that profit, which is 0.38% for 1 week. Well, I'm okay with that. You have to be okay with buying something, selling it for a profit, and then the next week you buy something else. Oh, boo-hoo for you. I mean, you make 1% a week or 2% a week. Boo-hoo. It's 52 weeks in a year. If you get 2% every single week, you're doubling your money every year. What kind of a retirement are you going to have if you can double your money every year or every 16 months? Because at 1%, you can double your money every 16 months. At 2%, you can double it every 11 to 12 months. Because it's a compounding factor. 1%. Anyway, let's keep on moving. Let's keep on keeping on. All right. Put that there. Delete that. Go back to here. Go back to here. I'm getting feedback over here. Who is feedback? Andrew. I can hear you making all that noise in the background, Andrew. What's going on? Uh-oh. You got muted, Andrew. Wait. Say that again. All right. I hate to be the bearer of bad news, but all the dumbbells in the background, I can't hear a word you're saying. Oh, yeah. Send it in the chat. That's much easier. Where is it? Okay, he wants to take a look at it. He's at the gym. You believe that? He's at the gym listening to what I said. Don't you have other things to do? Doesn't Barry Manilow sound better than me? Aerosmith. Come on, Aerosmith sounds a lot better than I do. Oh, K-View. Oh, okay. Let's take a look at K-View. K-V-U-K-E. K-View. For the boys at the gym. Here we go. K-View. It's never time. Anyway, here we go. The high. The low. Where was it? Where is it? Look at this. Up, down, up, down, up, down. What's going on here? It looks like it hit a new bottom. Now, you've heard it over and over again. You're going to make most of the money in the stock market buying low and selling high. Well, I hate to be the bearer of bad news, but you can't get any lower than the low of the year. And that was just a couple of days ago. So let's zoom into that. Before we do, hold on. Let's check out the numbers. Is this even worth investing in? Last price 1634, 1650s, 18. That's more than 1.5%. That's more than 1%. So let's do that one. All right. K-View, 2335. High of the year was in the second week of May. Last 30 days. Oh, that's easy to see, isn't it? 30 days ago, we're at 2060. Jumps up. The very next day is the high, drops down, goes sideways 2 weeks, drops down, finds the bottom on Friday. Friday is the new bottom. Right there. You can't get any lower than the low of the year. There it is, right there. Friday. Today is 1 day to the upside. Well, even as nice as it looks, I'm going to wait and do my due diligence. 2 days to the upside, Monday, Tuesday, and then maybe I'll jump in on Wednesday if Tuesday's higher, and then Wednesday's higher. Okay, bouncing off the bottom, going up. Well, if it makes sense, great. Well, the numbers are there. It's the low of the year, and you can't get any lower than the low of the year. Buy low, sell high. Here's your invitation. No, it is not a tip. It's not an advice. It's just an observation. Somebody asked me to take a look at it. I pulled it up. Here's the number. Here's what it's doing. Here's the low of the year. What usually happens. And the number's over here. There it is. There it is. There it is. That's more than 1%. Well, why the hell not? If you like cable. Isn't that weird? All the numbers look okay. The chart looks okay. But do you even know who they are? Do you know what they do? Why would you invest in something that you don't know? Okay, so it's not advice, it's not a tip, it's nothing like that, it's an observation. Someone asked me to take a look, I took a look, I read the numbers, there it is. It's an observation. You don't listen to a word I say, do your own research. This is your money we're talking about. Nobody has more interest in your money than you. Maybe your ex. Or your ex is a lawyer. There you go. Nobody has more interest in your money than you and your ex's lawyer. How's that? That's about accurate, isn't it? Uh-oh. I gotta prove I'm human by solving this little puzzle. There we go. I did it. Yay. All right, so unfortunately, Gabriel, I'm saying no to Wolf. Okay, I like predictability and safety. N. Castro, L'Oreal. Ooh, nice name, L'Oreal. Ariel, I like that one too. Philip, that silver guy. Okay, Luna. Mortgage Master. How are you today? Dan, how you doing, Dan? Barry, Jeremy, William, Jonathan. Dude. Bonellos. Ketchum. Gordon McCool. That's a cool name. Mark Kendall. Based reality. Based reality. Cool. My Yeti. Frodo's Wagons. That's cool. Sold with Kev. I'm going to assume that you car salesman, realtor, sold with. What do you think? Sold with Kev? Doesn't that sound like a realtor? Or a used? I hope it's not a used car dealer, dude. Sold with Kev sounds great if you are a realtor, but a car, a used car dealer. That's what it is. He's a used car salesman. All right, let's keep progressing. BDC Hardcastle. Cool beans. Gabriel. Drowlin. Oh, Dr. Alan Jones. Could put that little period after the DR. That way you get more respect. Because it looks like it says Drowlin. Like one word. Drowlin. Not doctor. Because Dr. period Allen. That makes sense. But all one word. Drowlin Jones. Dr. Allen, how are you doing today? Brian, how are you doing? Charles. Chris. Unknown shooter. That's a creepy name. Andresh, how you doing? Hildebrand. How you doing, Hildebrand? Scott. Wealth. Oh. Do you ever buy growth stocks just to stick with covered calls? I stick with covered calls because growth stocks are created specifically for you to park your money for years. And that's what people do with growth stocks. They buy, let's say Tesla. I buy it and just hold on to it for years. Okay, I was talking to this one guy. He says, yeah, I bought that stock about 30, I've held it for 30 years. I said, what? You put that much money into a stock, held it for 30 years? Imagine this. Because they've had stock options all the way back into the 70s. Imagine that, the 70s. So this guy's had the stock for 30 years. That's the 1990s. Okay, you could have easily covered call every single week for 30 years. Holy cow, imagine the money. But no, he just bought the stock and held on to it to absolutely nothing. Nothing wrong with that. That was just his approach. Okay, so yeah, most of the time, I'd say 95% of the time, it's always a dividend stock. Because absolute worst case scenario, if the stock drops, at least I'm getting a higher dividend year after year. That's the worst case scenario. But once in a while, I will do a growth stock. I did Chipotle, I think, twice. I did Tesla once or twice. I don't think I've ever done Blockbuster. I don't think so. Anyway. Omega Destroyer. Overboard. Mo Fire. What's going on, Mo Fire? Mr. Brown. Oh, that reminds me of Dr. Seuss book. Oh, the wonderful things Mr. Brown can do. He can go like a cow. He can moo, moo, moo. Mr. Brown can do it. How about you? Mr. Brown. Yeah, that's Dr. Seuss. Anyway. Cody wants to look at Coca-Cola. Cody, Coca-Cola's been in business for over 100 years. Okay, in the 30 years that I've been buying Coca-Cola twice. Now the reason why only twice, look at this right here. Current price 66. The 66 is going for 49 cents. Okay? $66. The premium is only 49 cents. That's not 1%. That's like 3/4. So why would I put money to a company, even though it's a good company? Don't get me wrong, it's a great company. They're Dividend King. They have over 50 years of increased profits, but they're only offering me less than 1%. So no, I don't buy Coca-Cola. Sorry. Dell, Eric, I have done Dell. So let's take a look at Dell. D-E-L-L. Eric, Dell. Let's take a look. See, Dell, 130.90. Okay, 134 is paying 220. That's over 1.5%. Of course, if you like Dell, either you like them or you don't. Okay, so Dell, high, low. Where was it? Where is it? Up, down, up, down, up, down, up. 133.90. The 134s are going for 220. Well, that's a yes for me. Let's fix this puzzle piece right there. So let's take a look. Need the glasses again. I just take them off, then I gotta put them back on again. Take them off. The funny thing is, as you get older, the screen is 5 feet away. I need the glasses to see that screen. But see these screens, I can take the glasses off and come closer. Don't get old. I swear, it's not as much fun as you think. Don't get me wrong. Being retired's nice. You wake up when you're done. Isn't that weird? It's kind of like a Saturday morning or a Sunday morning. Every day of the week, you sleep until you're done, and then you get up. So once in a while, I get up like 10, 11. But most of the time, I'm up at 5 or 6 because it's just a habit. All right. Anyway. BP sent me a friendship necklace. Thank you there, Mr. BP. Or is it Mrs. BP? I have no idea. Because all it says is BP. Eric, Dell. All right, cool. Let's take a look. Dell. A year ago, Dell was at 119. High of the year, end of November, 147. There's that DTS again. Right there, DTS, $70. Okay, that's the bottom of the year. Now from there, high, low, where was it? Look at this. Up, down, fine. Last 30 days. Here you go. Here's the last 30 days. High, low, where was it? Where is it? Look at this. Down, up, down, up. If you like Dell. 133.90 to 134. Let's do it. Let's for the fun of it. Dell. All right, so Dell. Let's get rid of this one. That one. 134s right there. No. See, hit the wrong button. Did you see it? I just hit the wrong damn button. Okay, so let's back up a little bit and hit the right button. All right, right button. 134. I tell people you can do it. No one yet. I just did it. It's aftermarket hours, so it doesn't mean anything at this moment in time. But during market hours, I could have lost some money. All right, anyway. Buy one covered call Dell, 3 October. That's the Friday. The 134 call. 247, 13,000. Let's see what that looks like. Because I look at it, I don't look at it like as I'm buying stocks. I look at it as if I am buying or creating a weekly cash flowing asset. It's a weekly cash flowing asset because every single week I get something from it. It's kind of like a vending machine. So this vending machine is costing me 13 grand. However, this week this vending machine is earning me 247. Well, what's the rate of return? Okay, come out wherever you are, 247, divided by the investment for this particular trade, 13,153. Grand total of 1.87. Can you imagine that? It's like three companies we looked at, all close to 2% or more. 1.87 for Dell. Sorry, I'm writing it down. Anytime I see something halfway decent, I write it down. Well, because I'm old school. Sorry. I'm old as dirt. That's what some kids say. Man, you're old as dirt. Anyway, so that's Dell. What else do we have? Okay. The real Chris. Thank you there, real Chris. Laurencia. Good evening, Laurencia. Michael, how you doing? Alex. Thank you there, Mr. Alex. Good day. Screen behind you. Looks like SPY. Okay, good day. I can see him on my phone. I just need my glasses. Okay, got a wise guy here. Is that how we're going to pick your stocks? Yep. Just like that. I already did Coca-Cola. Where did I miss? Uh-oh. I'm missing all these. Wow. Ooh. I missed all these questions. Where did you tell? Where did you Coca-Cola? Oh, Good Day wants to take a look at Apple. Apple. You are the apple of my eye. Apple. AAPL. Here we go. Hell no. I don't buy it the high of the year. The high of the year was yesterday. Right there. Look at that. Yeah, no thank you. Sorry, don't get me wrong. I don't like Apple. I do. By the right time, had you told me 3 weeks ago, bottomed out right there, yeah, I could have taken that right up. Where the heck were you 3 weeks ago? See, today doesn't help me any because it's at the high of the year. Yeah, no thank you. That doesn't work for us. STZ. STZ. Who came up with STZ? Ooh, do you see that? The bottom of the year, right here. The high a year ago, down, sideways, down, right here. Now she's turning back up again. 136.47. The 136 is going for 210. The 137 is going for 160. Even the 138 is going for 120. Well, they all look good. But I want to do the 136s. Let's see what it looks like. It's going to be a yes because look at this. She drops right here. New bottom. Now she's turning up. Well, let's zoom into that and see what that looks like. Let's get rid of all that rest of the crap. What do we need to see? Right here. Right there. Here we go. 30 days ago was the high. Bottom was right there. Now she's going back up again. Well, hell yeah. Well, let's take a look. STZ at 136. Change this. Current stock 136. Here we go. And one contract. Tra-la-la. Here we go. Right there. At the market. Tra-la-la. And there we go. By one covered call STZ 3 October 136 195.13. Well, let's do some little bit of math. See if that works. Calculator 195 divided by the investment 13,405. 13,405. Total of 1.45. Not as good as the other ones, but still. ST 1.45. STZ 1.45. That's over 1%. Why the heck not? If you like STZ, it's always going to come down to that question. Okay, question number 1. Does it make sense? Question number 2. Do I like STZ? Constellation Brands. Number 3. Do I like Constellation Brands at the current price of 136.47? And question number 4, am I willing to buy it at this current price? Never sell until it hits my target. Here's a funny one. You ready for this? This is going to be kind of funny for those who think it's funny. Isn't that funny? This is funny for those who think it's funny. All right, so I'm buying it at the price tomorrow morning, at the market price. 136 right here, 136.47. Okay, that's the current price. 136.47. My goal, my target, 136. So I'm going to buy it for 136.47. I'm going to sell for 146, and I'm still going to walk away with $195 per contract, or 1.4%, or whatever that percent was. It's already above the price that I want to sell it for. So all it has to do is stay above 136. It's at 136.47 now. We got 4 days left. Tuesday, Wednesday, Thursday, Friday. Monday's already gone. I can still make 1.4% if, of course, I like STZ. No, it's not a tip. It's not advice. It's just an observation. Somebody want to take a look at it? Who's that? Eric? Yeah, Eric want to take a look at it? We looked at it. Those are numbers. That's what it looks like. What's next? Come on down. Why did Pepsi drop? Oh, is that a serious question? Why did Pepsi drop? Well, go take a look. It's not going to give me the answer why it dropped. Give me, the numbers, and then maybe we can take a look at the numbers and see if that makes sense. Okay, so I'm kind of curious. When you say, why did Pepsi drop? Are you talking about why did it drop back in October? Why did it drop in March? Why did it drop in August? See, it dropped. Look. It went up, it dropped. 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 So saying, why did it drop? Well, it dropped 4 times in the last 1 year. You got to be more specific. Okay, if you're more specific, you ask a better question, you get a better quality answer. A better quality answer leads to a better quality life. Because the better questions you come up with, it's going to challenge whoever you're asking the question to come up with a better answer. Well, great. Come up with an even better question. How can I safely, predictably, consistently get 50% per year on my investments, spending less than an hour a week? Well, that's a pretty damn good question. Anyway, it dropped because that's what stocks do. They go up and then they go down. That's it. They go up, they go down. That's it. It's at 140 and it's still dropping. So yeah, if we zoom into that, we're basically looking for bottom. Okay, here's top. Here's the bottom. Okay, I like 2 days to the upside from a 30-day bottom. 30-day bottom's today. And it could be even lower tomorrow. And it can be even lower Wednesday. We don't know until it stops, turns around, goes back up again. Now, don't get me wrong. I love Pepsi. I do. Okay, Pepsi is a dividend king, which means 5 decades. That's 50 years of increased profits. Well, hell yeah, it's on my list. But it's not on my list for this week. Hell no. Maybe next week. Okay, maybe I might Pepsi down for next week. Pepsi usually always gives 1%. Coca-Cola doesn't, but Pepsi, yeah. So I'm writing Pepsi down for next week. Okay. Next. Jokester! Miss Games, thank you. You're welcome. Wealth Now. What about NVIDIA? They started giving out dividends. You're kidding me. Okay. No. Do you remember I told you earlier? Okay. There's always going to be someone saying this stock is wonderful, this stock is great. Let's look at it. Let's buy it, even though it's losing money consistently. So let's take a look at NVIDIA, and I'll tell you why I don't like shiny objects. NVDA. So give it a second. It's gonna pop. Give it a second. It'll pop. Now I tell everybody, if you really need to learn access, detail, and Wealth Now wants to take a look at NVIDIA. Okay. So NVIDIA is 1 penny, and 4 1/100ths of a penny. $181 for a 4-cent dividend. 4-cent dividend. 90 days, they give you a penny. See? Every December 2024, 1 penny. March 2025, 1 penny. June 2025, 1 penny. And September 2025, 1 penny. It gets absolutely worse. Now, this is what I mean by check your numbers. Now, we're going to check out statistics. Okay? Statistics tell us more financial information. Wonderful stock, NVIDIA, that everybody's crowing. Wonderful stock, NVIDIA. Yeah. Take a look at the damn numbers. Really, seriously. Revenue per share. How much money coming in directly related to how many shares they have? Well, the shares are $181 a share. The revenue coming in for each share is $6.76. That's it. Hold on. It gets worse. The book value. $4.11. Now, do you understand what the value is? The book value basically is what you tell your accountant. What's my net worth? You take everything you own, everything you owe, mash them together. What do you have left? $4.11 per share. So, in reality, you're paying $181 for a stock that is worth $4.11, and it pays out 4 cents a year. Explain to me in a manner as if I was like 4 or 5 years old. Try to explain to me why you think that's good. You're paying $181 for something that's worth $4.11 and pays you 4 cents every year. I'll give you an example. Let's take another stock to give you a comparison. The difference between NVIDIA comparison between General Motors. Now we know who General Motors is. General Motors is $61 per share. For each share they have, brings in 61. Well, wait a minute. Each share they have, $61. Brings in a revenue per share, 108. NVIDIA is 181, and it brings in what, 20, 30 bucks? Well, this is 61 bucks per share, and it brings in $82 per share. That's a shit ton more. Hold on, better. Look at the book value. The book value is 60. So you're paying $61 for $69 stock. Think about that. That kind of makes sense. Let's get out of this. So, just in case you were curious, no, I don't like NVIDIA. And no, it is not a proper dividend-paying stock. Okay, it is a, what do you call that? A growth stock. Okay, if you're looking to make money on NVIDIA on a weekly basis, the only way you're going to do it is by buying, selling. That's it. Without a dividend, I don't really count 1 cent as a dividend. That's an insult. $181. Well, we're going to give you a penny. Really? You really think that 1 penny is worth 181 bucks? Sometimes I wonder. I told you someone was going to do it. Okay? Rule number 3, make sure the company is consistently profitable. To find that out, you go directly to the dividends, or you go directly to the earnings per share. How much earnings per share does NVIDIA have? $6? Come on, give me a break. Anyway. I'm just going to pass up this guy. Sorry, Wealth. Now I'm going to disagree with you. Jokester! How you throw them into the calendar on Thinkorswim without me doing a workshop? Oh, that's easy. All right. Jokester, you ready for this? Pay close attention. Get close up to this. Get close up to the screen. Here we go. First thing I want to do is I want to pick a list. Right here. See what says watch list up over here in the corner? Watch list. Okay. The very next square to the watch list is called this one right here. And right down here. All right. create watch list. So we're going to create a watch list, and we're going to call it Jokesters. Okay, create watch list. Okay, right up here. Okay, this little red square. Enter the name, and we're going to write Jokesters a weenie. Stirs stocks. Jokester stocks. Okay? Do you see it right there? Jokester stocks. Then I want to add symbols. Now you got two choices. One, you can add them one at a time, or two, you can import the list off of a CSV file. Okay, that's just comma separated variable, whatever that is. So one at a time, whatever. So let's do them one at a time. Add symbol. You ready? F for Ford. D for Dominion, DD for DuPont, T for AT&T, MSFT for Microsoft, DEL Delta, Dell, sorry, DAL Delta Airlines, M Macy's, Wells Fargo, WFC, Bank of America, BAC, so on and so forth. You just keep doing it that way. Okay? And then after you put them all in, you hit the save button. Okay, after you get to the save button, tra-la-la, there you go. Now, market watch, all the way over to here, come hit the sunshine, let the sun shine. There it is right there, let the sunshine shine on that right there, click on that. Come down to personal, because this is your personal list. Once you hit personal, and where is it? Right there. Check it out. Jokester stocks, right there. I click on that, and boom, there they are. Boom, they are. Bank of America and Dominion. Those are the only ones that popped up. Not that difficult. Ask. Matthew 24. Ask and you shall receive. There you go. All right, so that's how you import them. Let me show you how you get rid of them, because I really don't need your list. Back to here, Jokester stocks. Okay, right here. The very bottom. Okay, here. Jokester stocks. I don't need your list. Don't feel bad. It's not an insult or anything like that. Right there. Delete that. And yes, I want to delete it. There you go. Now it's gone. Simple, right? All right, next, what do we have? Jokester, dang. All right. Sorry, what system are you using to enter the information into the calendar? Oh, Alex, I just showed it to you just now. So it's kind of redundant. Thanks for that, Jokester. Thank you. You're welcome. When did Tony Hawk start giving trading classes? Since I broke my big toe and I can't do a double flip ollie with a twisted turn. That's one. Is this Joe? Yes, it is. No, it's not Joe. It's James. What's Gabriel? You asked me yesterday. OPINL. Asked me yesterday. I gave you my opinion yesterday, and yet you're asking me again today. OPINL. There it is right there. And again, just like yesterday, when you asked yesterday, it was a no yesterday because there was no options. And no, they didn't create options overnight, so guess what? It's going to be another no today. And it will continue to be a no until this offers weekly options and has 20 years of profitability. Okay? I appreciate your interaction. I really do. Okay, but it would best be use of your time and energy if you actually did something that fit this strategy, or go to another website or another live channel that's actually teaching something to this effect, where this is an actual, it's an interesting one, because at the bottom right here a couple of days ago, now it's going back up. It's a great time to buy. If that's what you're looking for. It's not what I'm looking for. Okay, the only way I'm going to make money off of this is to watch it every single day. And I have no desire to sit in front of the computer every day. Next, Apex. What stock were we talking about? OPINL. Rob, how are you? Zach. What's happening, Zach? Colin, how are you doing? Kowalski, good evening. Icy, what's going on? Hugo. Rob, 4 days. I'm not quite sure what you mean by 4 days, other than the fact that we have 4 days left of trading for this week. Tuesday, Wednesday, Thursday, Friday. It's 4 days. Buttsack. Where did you come? Why did your parents name you Buttsack? I remember the day when CDs paid almost 4%. Yeah, I remember that too. You're just as old as I am. King D. What's happening? Got approved for option trading today. Woohoo! Cool beans. All right, Tim's on the great. Okay, Tim's on the great. How are you doing? R is going to be a no. Tim's on the great. Okay. This thing was 50 cents 8 months ago. Explain to me why a company that has been consistently profitable for 2 decades, that's 20 years, why did it go all the way down to 50 cents? My guess is it's not been profitable for 20 years. I just put 150 Bitcoin and 100 Ethereum thoughts. Okay, need camera roll. Okay, need camera roll. I don't do cryptocurrency. Remy, how do you navigate on a bear market with this strategy? Oh, it's very simple. Never buy a company you don't want to hold on to that has not been consistently profitable for at least 2 decades. No, we haven't done Target yet. Let's do Target right now. TGT. Here we go. Did you see that right there? See this? New bottom, bouncing off. Cool beans. Target. Dividend King. Whether you like them or not, 5 decades of consistently increasing their profits. Sorry, they do. 5 decades of consistent increased profits. A year ago, 160. Dropped all the way down to 85. That's almost a 50% drop. Here to there. You got to watch out for these things right there. That's called the black swan, where it goes from 157 down to 120. It's a $30 drop. That's a big drop overnight. Okay, I tell people that all the time. See, look at this. Up, down, up. You don't take your profit. Don't be surprised if the market maker takes it away. So that's Target. Dividend King. 88.83. The 89s are going for 117. Well, that's a yes. It's over 1%. That's all I'm looking for. A company that's consistently profitable. Target is. Now, Target, I tend to... There's not very many stocks I stay away from during earnings, but Target is one of them. Because they're notorious for black swans. Let me show you what a black swan is. That, my friends, is a black swan. Okay, up, down, up. And look at this. From 156, drops all the way down to 120. Up, down, up. Why? See this right here, that big blue line right there? That is volume. Okay, this is notorious for 5 little words. Now, I haven't done this in a while, so let's do this just for the fun. I haven't done it in a while. Okay? What I want you to pay attention to is this right here. The bid and the ask. Now, usually between the bid and the ask, it's usually 1 penny, 2 pennies, 3 pennies. So let's just say 2 cents for argument's sake. Okay? Right now, it's going from 88.67 to 88.79. If I showed you that number, you'd freak. Seriously, I would. Because 88.67 to 88.79 is 12 cents. It's 12 cents a share that the market maker puts in his pocket for every single stock that's traded. 12 cents a share. 8 million shares traded today. You want to see what that looks like? Take a look at this. 12 cents a share multiplied by how many shares was it today? 7,955,637. That's how many shares traded today. And the difference between the bid and the ask, 12 cents. This is what the market maker made today, just on Target. $954,000 for one day. That's crazy. All right, you're going to like this one. Now, we're going to use 2 cents as an example. Okay, because, you know, that's just ridiculous. All right, right here. This is what we're going to look at. You ready? Okay. Down here, this blue line, down here. Okay, this is volume. How many shares trade on a daily basis. Now, on average, the market maker gets the difference between the bid and the ask. So during market hours, especially with a stock like this, there's usually only a 2 to 3 cent difference between the bid and the ask. Okay, so let's just use 2 cents for argument's sake, just to prove my point, and you are going to say, holy crap. Probably a better choice of words than I used. So let's take a look at the average numbers. If I look at the average numbers right about there, okay? And that's what the average number, 8.3 million shares. On average, every single day. That's what the market maker makes. Can you imagine it? All right, hold on. Calculator. Clear. 8.3 million shares every single day, multiplied by 2 cents. Okay, so the market maker averages $166,000 a day if it's a 2 cent spread between the bid and the ask. Let's take a look at when those 5 little words come in. And I'm going to tell you what those 5 little words are in a second. Okay, that day. Okay, see the big drop? This is called a black swan. From here all the way down to here. That's not what we're looking at. We're looking at this right here. Whoops. This right there. The volume for that one day. And I'm going to tell you what those 5 little are. Right there. Do you see that? 65 million. So an average of 8 million per day, on average every single day, 8 million. These 5 little words brought 65 million to the plate. So let's see what that 65 million is, and I'm going to tell you what those 5 little words are. Calculator. 65 million multiplied by, remember, 2 cents a share. 1.3. Do you see that? 1.3 million. Okay. So on an average day, the market maker makes $100,000 bucks. Well, a little over 100,000, because about 8 million shares traded. Now, this day right here, where this black swan happened. See these little right here? Okay, little dollar sign, a little telephone, and a little light bulb. Okay, that's earnings. Earnings and dividends on that day. The 5 little words. You ready? We didn't hit our target. That's it. We didn't hit our target. 5 little words. So the market maker is in control of the one number. There's only one number. There's 5. You ready? Here we go. The opening of the day, the high of the day, the low of the day. Opening, close, high, low, and volume. It's the 5 numbers. Opening price, closing price, high of the day, low of the day, and the volume. How many shares traded? Those are the 5 numbers every single day. Now, out of those 5 numbers, only one of them is controlled by one person. Now, it's the opening price of the day. One person, and one person only, the market maker, decides what price do I open at this morning. That's the opening price of the day. The market maker makes that decision. So if he wakes up in the morning and his wife gets him a nice breakfast and whatever, you know what I mean, okay, and he's in a wicked happy mood. He's going to be happy. He's going to make that baby go up. But just think, the market maker just found out his wife's cheating on him, caught him in bed with his brother, and then all of a sudden it rains down, he gets a dent in his brand new Lamborghini, he gets to work, and he's all pissed, so now he's going to open it down. It's a little exaggerating, but you know what I mean. Only one number is controlled by one person, that's the market maker. We didn't hit our target. So the company says to the market maker, those 5 little words, we didn't hit our target. Earnings. We didn't hit our target. Great. He takes that, rather than being here, he drops it all the way down to here. Now the other 4 numbers, we decide. Because once it opens, we buy because we think it's a deal, or we sell because we think we're taking profits. So the high and the low is dictated by what we do, the investors. Okay? The close is dictated by what we do, the last trade of the day. We're all piling in, trying to buy, sell, buy, sell, buy, sell, the last trade of the day. A person, an investor did that. The high of the day, an investor did that. The low of the day, an investor did that. The volume, all of us did that. There's only one number that's controlled by one person. That's the opening price of the day, and that's the market maker. So Target. I don't know who wanted to look at Target. Kev still wanted to take a look at Target. So this is all your fault, Kev still. So Target is one of the very few companies where the market maker overreacts. We didn't hit our target. Big deal! It drops. He makes $1.3 million a day. Do you think he cares about us? Hell no. He takes those 5 little words and he manipulates them. Oh, we didn't hit our target. Great. Perfect opportunity to go from 155 down to 120. That's his reasoning. Is that his reasoning, or does he need a new house? Hey, I need a new house in the Hampton. Or my house in the Hampton needs a new pool. Or my daughter just crashed my Lamborghini. I got to go buy another one. Let's do this. Screw people out of all their money. Anyway, no to Target. Not this week anyway. Oh, wait a second. Let's get out of here. Where is Target right now? Oh, here, right there. It says the bottom right there. Okay, so the last 30 days, right there. Okay, so 30 days ago, here we are right here, 97, and we drop all the way down to 86. Very slow upward trend. So yeah, the bottom was a week ago, right there. Now it's slowly going up. Don't worry, there's no earnings reports coming out, so you're not going to get a black swan anytime soon. But some companies do react crazy. Really crazy. Now, when that big drop, that $30 drop came in, go to Target and say, hey, when that stock dropped, did the CEO call you and say, hey, you need to do a better job because our stock dropped? Or hey, you know what? Lay off a couple of the workers. We need to cut. We need to trim the fat a little bit because we missed our target. No. People who work at Target do their 9 to 5 day after day after day after day. It's nothing more than us, investors. We're the ones who decide what's too high, what's too low. We buy and we sell. We create this mess. Next. All right, so that's Target. Holy cow, 10. Does that mean it's time for questions? I think it is. All right. Questions. Let's get some questions here. Ask your questions today. Ask them, please, my dear. Anyway, all right, what do we got? True Talks, I like that. Way to go, Mr. Clean, and not bad. All right, so questions over here. K-View, we already did K-View, cool beans. Screen number 1. Target, we just did Target. All right, what else do we got? Manny, good evening. Brad. Rakita. Okay. Taryn Dixon, what do you think of OKLO? Taryn, how are you today? OKLO. I'm not quite sure. OKLO. Interesting. Now, here's the thing. Don't get me wrong. I don't know very little about OKL, but here's I do my opinion. Okay. All right. We got a 30-day bottom 3 weeks ago. Okay, right over there. She shoots up nice. Last Wednesday's a 30-day high. She gaps down Thursday, even lower on Friday. Today, 1 day to the top, right there, just today. That's only 1 day up from the 30-day top. So if you really like it, keep your eye on it. Okay, I like 2 days to the upside after a bottom off of a 30-day top. 30-day top's right there, Wednesday. Thursday she gapped down. Gaps have a tendency to fill. Okay, so it's going to go up and fill that gap eventually. Is it going to be this week, next week? Don't know. But you already have one day to the upside. That's today. If you really like it, great. Derby do. Okay. If you only had 10 seconds to Geiss, I have no idea what Geiss means. What does Gice mean? Anyone? If you only had 10 seconds to Geiss trading advice to your younger self. Oh, what do you tell you? Okay, give. I'm going to take that give. If you only had 10 seconds to give my younger self advice. Don't be greedy. That would be a good one. I don't know how quickly can I sell them. Okay, dividend. Wait a minute. Dividend capturing on dividend stocks 2 weeks before the EX date. Wait a minute. Hold on a second. How might I word this? Do covered calls 2 weeks just before the EX date on good quality companies. That would be it. Next, TMC. What is TMC? Too much candy. That's what TMC is. Where the heck did it go? Uh-oh. All right, we did RR already. Uh-oh. Okay, I remember that. All right, RR, blah, blah, blah. Already did that one. Did that one. TMC. Too much candy. TMC. Same thing. If this thing's less than $1, 8-9 months ago, I seriously doubt it has 20 years of dividends. Sorry. Hey, Crunktoid. How you doing? Back again. Now I remember the name Crunktoid. Where is it? Where is it going? Do I like it? Well, yeah. That sounds kind of like what I would say. TEM. What is TEM? TEM. Tempest. Cool. Now, Tempest. Look at that. That looks interesting. Okay. You get your 30-day bottom, going to your 30-day top. Now it's pulling back right there. Thursday, Friday's higher. Today was higher. That's 2 days to the upside. If you like Tempest, I have no idea who they are. So for the fun of it, let's go to Yahoo Finance. Put in Tempest in there. TEM. Put in M. Find out why I know absolutely nothing about TEM. Historical data. Okay, I want to see what the historical profits look like. Dividends. That's why I have no idea who TEM is. See, if it doesn't have dividends, not that it's a bad thing, but how can I tell when it's going to move without having something indicate every 90 days what it's going to do? They don't have a dividend, so they don't share their profits. Well, then how am I supposed to know where the tops are other than watching it every single day? There are certain stocks that fit exactly what it is. This one doesn't. It doesn't mean it's a bad stock. It doesn't mean that at all. It just doesn't fit what I. Crunktoid, thank you for that. Josh, how you doing? Life Wonder, check one from your list. Dow, D-O-W. D-O-W. Interesting. Okay, high of the year, the low of the year. She went up, she came back down again. Now what's going on right there? Let's zoom into that a little bit closer. 30 days. Oh, there you go. Okay, she comes down, up, 30-day high, 30-day bottom, 2 days up. You can't get any lower than the low of the year right days ago. Do you like Dow? Do you like it at this price? Well, this price is $22.89. The 23 is going for 42 cents. That's more than 1.5%. That makes sense to you. If that makes sense. Okay, I like how I have them in one of my accounts somewhere. Karush Dahits. Okay, thank you, Dahits. The Edge, good evening. Life Wonders, thank you. Karush. I just signed up for your Patreon membership. When I get an email for tomorrow trading day. Tonight. Okay, as soon as I'm done here, I'm going to send out the invite for tomorrow morning. So you should get it tomorrow morning. You should get it tonight. H. Telling my kid this man is Tony Hawk. Well, that's the silliest thing you could possibly do. Because what I'm thinking here, okay, if your kids, depending what age they are, okay, now if your kids are in their 30s or 40s, they'll know who Tony Hawk is. But if your kids are under 20, they'll have no clue who Tony Hawk is. But I appreciate that, though. Thank you. Karush, I just signed up, got that one. Karush, thank you. Darren Dixon, thank you. Karush, I just signed up here. I got that one. Dude, you don't have to tell me once. Marion, and am I rich? Marion, that's an inappropriate question to ask. But yes, thank you for asking. Okay. What do you think of Apple? I love Apple. It's just not the right time to buy Apple. Not for me anyway. Okay. Who's the market maker? Alex, that's a good question. The market maker is different. Each stock has its own market maker. And some stocks have more than one market maker. Is that like a whale? Not necessarily so. Truist, good value. Okay, Buddy Mitchell, you actually got to give me the ticker symbol for that. Okay, I have no idea. No idea who it is. Is Tesla too high to buy now? Now, user 82184745. Yeah, whatever. What were your parents smoking when they named you that? Anyway, TSLA. What do you think? Okay. Here's Tesla. A year ago. She drops, shoots up like a rocket. Sinks like a broken rocket. Goes up, goes down, goes up. Look, right now it's the high. I don't buy anything at the high. It's not the high of the year, but it is the high of the 90-day period. Okay? It was down at less than 300. Now it's up over 400. Okay, I don't buy anything at the high. Thawkins. Ooh, back again. I remember that name. If you had Zim at 19, what option would you sell? The 19. That's a crazy one, isn't it? If I bought it at 19, I'm going to sell it at 19. What is Zim at? Oh, well. If I had it at 19, it has been 19 for, oh God, since May. Last time it was at 19 was in May. Okay, now it's down to 13. Well, I'd seriously think, if it was me, I'd seriously thinking of dollar cost averaging. Because if you dollar cost average, if you're at 19 and it's at 13, first of all, I'd wait for it to finish dropping. Okay, number one. Okay, here's the bottom. Shoots up, now it's dropping. First of all, I'd wait for it to drop and finish dropping, turn around, and start going back up. Then I would dollar cost average, and then from there, I'd sell covered calls that are closest to my new what do you call it? Dollar cost average price. That's just my thought. All right, Karush, I got that already. You said it like 4 times. Okay, you only have to do it once. We did that one. Truist, we did that one. LIDR. David, what is LIDR? LIDR. Oh, it's a hell no is what it is. I don't even bother looking at it anymore. I'll tell Fonzatelli. Isn't it Arthur Fonzarelli? Annalie, another one on your list. Absolutely. Walmart. Oh, there goes TFC. When you're in the money and you roll forward, what strike price do you like to do? Mike Sweeney, it's always going to be a balancing act. The question is going to be, what did I buy it for? What strike price did I sell? What did I collect? Where is it now? Where is it going? What does it mean? Okay, what you bought it at never changes. That's the price. That's your entry price. Okay, the price you paid for your ticket when you jumped on the merry-go-round. That's what it is. Okay, so whatever you paid for it, that's your entry price. Now, you can change the strike price to sell a covered call again anytime you want. You can go higher, you can lower. As long as you own that stock, you can do whatever you want with it. As the stock price goes up and down and fluctuates, it's going to change your question. It's going to change the way you look at it. Okay, so Buddy wants to take a look at Truist, TRF.TFC. Interesting. Okay, so your 30-day high at 47.50 drops down to 44, shoots back up to 47.25, and now it's down to here. That looks a mess. I wouldn't do anything until you get a more clearer picture going on with it. Wealth Now. Wealth Now asked me something earlier. WMT Wally World. What's going on with Wall World? Leveling out. Look at this. 30 days ago, we're down 95. Shoots up to 106. That's $20. No, wait a minute. 96 to 106. That's only $10. It's a 10% jump. Comes back. Now she's going sideways. Okay. If you like Walmart, KD Van wants to take a look at Gap. GAP. I think I have some Gap. Ooh, I think I do. It don't look good. Okay, so a year ago, Gap's at 70. What is that? 22? Yeah, 22. Bottoms up. TDS. For second week of April. The high is right there, 29. Well, now we're down to 21. Look at that. 30 days ago, right there. Okay, 30 days ago. Jumps up, drops down, new bottom right here. I just sit and wait to find the new bottom. Might be tomorrow, might be the next day, might be the day after. But I like once it hits the bottom, which could be today, could be. Don't know until tomorrow. Because tomorrow we'll have something to compare it to. So it's either going to be higher or low tomorrow. All right. Can you tell me what you think about C3AI? Never heard of it. What do you do tax-wise as a trader? Ooh, that's a good question. Tax-wise as a trader, well, my trades are all in a corporation. Corporation is incorporated in Delaware, which has no corporate income taxes. Isn't that nice? And then I trade out of Florida, which there's no personal income tax. There you go. Okay, now I'm talking about federal. Okay, no state, no federal. Okay, you didn't hear this from me, but you can take a look at that book. Go ChatGPT and see in the book, in the IRS code book, how many times does the word mandatory show up? That's a question for you. How many times does the word mandatory taxation show up? Then go in, ask ChatGPT the almost exact same question, except how many times does it say voluntary in the tax book? And then ask them, what's the exact phrasing, or what exact, what page, I forget what they call them, code number or whatever it is, that specifically says any amount of money paid to the IRS is to be considered as a gift. Look it up. It's in that book. Now, I got that information from someone else who actually took a picture of the page and book and all the code numbers that went with it. And he circled it right there, highlighted it. Any money paid to the IRS is to be considered as a gift. Okay? You know what I'm going to do one of these days? I'm going to take one section. I'm going to pick one page on my website, all about taxes, and different people who have different things to say about taxes. Number one is, taxes are voluntary. That's number one. Number two, any money given to the IRS can be considered as a gift. Number three, the IRS has absolutely nothing to do with the federal government. Nothing. Okay? When they say the law says, whatever code is that, the 16th or the 14th, whatever it is, enabled the Congress to enable taxation amongst the citizens. Well, Congress is a part of the U.S. government. The IRS is not. And then you can also take a look what is the jurisdiction of the IRS? It's a 10-mile square radius of the Capitol. Yeah, they're probably watching. Okay, and IRS is not domiciled in the United States. It's actually domiciled in Puerto Rico. So there's a lot of ways of looking at it. Okay, so for an entity that doesn't give a flying dead rat's carcass about your personal freedoms or whatever, you think they really care whether or not it's legal for them to take money from you? No, because you volunteered to pay them. Anyway, let's keep on going before I get myself in trouble. All right, so that's it for what do you call it? Camera one. So camera one, down with the questions. There's nothing noble about paying taxes. Well, not necessarily so. Because property taxes pay for our schools, pay for our streets. Okay? Gas taxes and tolls when you're riding on the highway, they pay for our highway infrastructure. Okay? Money that goes to the federal government is used for us. Now, Ronald Reagan did a video many years ago. He said not a single nickel. Not a single. Ronald Reagan said this. Not a single nickel collected by the IRS goes to anything that supports the U.S. economy. Nothing. It goes to pay the debt of the what do you call it? The Federal Reserve. And you've seen the way the Federal Reserve is. All right, you guys grab me. All right, stop it. No more taxes. All right, no more now. I can go down a rabbit hole and just talk about stuff. Okay, so Hercules wants to take a look at CALM. CALM. You don't want to get me rolling because I can just go. You guys definitely don't want to hear what I have to say. So CALM is a monthly. I don't do monthlies only because monthlies once a month. So I'm getting a check once a month rather than a check once a week. Explain to me why that's a good thing. And no, the one once a month is not twice the size or 3 times the size. No, they're all about the same. So if I'm getting 1 to 2% for each trade that I do, why would I only want to do 12 in a year? If I get 1 or 2%, 52 times a year. So I don't do monthlies because the numbers just don't work. Hi, when you pick your options, what strike do you usually pick or a delta? Okay, so Punto, great question. However, I'm going to be honest with you. I did not try to explain the Greeks to my 9-year-old daughter because the trading strategy I'm showing you was created specifically for my 9-year-old little girl. When she said, "Daddy, what are you doing? Can you teach me?" I said, "Sure." I wasn't going to tell her about the Greeks. Don't get me wrong. Adults, they have a tendency to make things complicated, and they like to use adults because it makes sense, depending on what it is you want. Okay, so I'm only looking at stocks that are consistently profitable. Fine. I'm only looking at stocks that have a dividend that is consistently increasing for more than 20 years. Now I'm looking at the chart. It goes up, it goes down, it goes up. Is it in an upward trend? Great. Does it look as if it can hold that trend for 5 days? Well, great. That's what I'm looking for. Is it 1% or more of the purchase price? That's what I'm looking for. I'm not really looking at the delta. Hey, Lothar. Okay, yep, I'm going to agree with you. Thank you. All right, so hopefully, Punto, that answered that question. Tom Frederick is reviewing like he's doing tonight. Okay. Cinders, yep, okay, whatever, thanks. Okay, Cinders. Caden, okay, Hercules, where I looked at CALM, Odom, how are we doing? Calvin Hill, how are you today? CXX. What is CXS? Ball. CXS. There are no options on CXS, so that's going to be a no. Sorry. Hey, 86. 86 is in the house. Moderator blocked the page. Oh, no. Solid Shadow. How's it going? Annie! How are you doing, Miss Annie? Thank you for that, Miss Annie. That's very nice of you. What software are you using, if you don't mind me asking? Annie, this is called, let's do back to this so you can look it better. This is called think or swim, and it's offered through Charles Schwab. Okay, I don't get any credit for it. I don't get any kickbacks. I don't get any affiliate commission. I get nothing. Not even a Christmas card saying thank you for showing thousands upon thousands of people our software. Nothing. I get nothing. But I do. I like it because it shows me everything that I want. Ooh. All right, next. Olivia, that is so sweet. Thank you, Miss Olivia. YTBE. Okay. Annie, I don't think he sees TikTok's comments. All right. Signy. Signy Ethiopian. Okay. Yeah, I do see all the comments. I just stop them and I scroll through them as I can get to them. So I'm done with screen 6, screen 5, screen 4, screen 1. So I got screen 2 and screen 3 to go through before 11 o'clock. So I do try to look at all of them. Leanne! Oh, Leanne is sad. I'm sorry about that, Leanne. How can we cheer you up? Yes, logo looks Schwab's Think or Swim. All right, there you go. Okay, Hercules, where I looked at that one. Can you look at UPS? UPS. Who said that one? Just Jack. Hey, Just Jack 48. All right, that's the wrong one. UPS. Interesting. Okay, a year ago, we got the high at 145, and we got the low right here at 84.50. Okay, so it's 30 days. Here we go. Here's our last 30 days for UPS. 30 days ago, we have the 30-day high. We got the bottom right here. She shoots up, goes sideways, dips again here. 2 days to the upside. Look at that right there. So that means, hypothetically, if you really like UPS, Jack. Hold on, let me get up for this one. Because apparently, you got your bottom here. 1 day to the upside, 2 days to the upside, 84.50. The 85 is going for 60. Oh, come on! I got up for that. 69. It's not 1%, so it's going to be no for UPS. As much as the chart looks okay, just doesn't look good. CDR. Oh, what was your verdict on Harley Davidson from last night? I bought some Harley Davidson this morning. We actually went over Harley Davidson earlier today. And I think it was 2.49% today. 2.49 for Harley Davidson. It's if you like it. Now, that's not a tip. It's not advice. It's just me telling you what I saw earlier today. Bro, what's up? Wealth Decoder 101. Woohoo! In the house. I've been AFK, not even on TT, honestly. I have no idea what AFK means. But okay. Wealth Decoder, hope you've been doing well. Cool. Jessica, how are you, Jessica? Wealth Decoded, appreciate you. Likewise, brother. Thank you very much. Wealth Decoded. All right. Lefty Sister Cat. Lefty. Are you left-handed or are you on the left side of the political, what do you call that? Political spectrum. I don't know. I don't want to know. Don't tell me. Victoria, good evening. Yoneki. That's an interesting name. Cool. Chris, how you doing? Time to delete. Ooh, back again. When you say you have some dial stocks, that's not your goal to own stocks. It's just to get them premium. Yes, exactly. So you do more than 1 week options, correct, due to dividends? No. Okay. Fabgia? Anyway, time to delete. You're right. I'm not looking to own the stocks. I'm not looking to hold on to them. The longest I've ever held on to anything was 14 months, and that I believe was Kohl's. Kohl's, believe it or not. I bought Kohl's last July, I think it was. In every single week, it gave me 1%, 2%, 3%. Every single week, it's like no way. Macy's too. So if I buy a stock and it gives me 1 or 2% every single week, why would I sell it? That's a 50% return. Okay, so I made over 60% on Kohl's, and the stock kept dropping, and I started making money for it. It was crazy. All right. Okay, got it. So you do more than 1 week options? No, usually just 1 week. It's usually for this week. Because see, today, today's the 29th. Okay, this option here, 3 October, that expires this Friday. Okay, so yeah, I'm doing this week's option. Now, Wednesday or Thursday, I'll jump to next week's option because the time frame's just less. Would you please check SVCO? Why? SVCO. I'm going to say no. Who's that? Football Legends. Now, Football Legends, the reason, how do you track your returns in Thinkorswim? I don't. Okay, there's a little link. Hold that thought. Who is that? User 373218. There's a link right here that goes to Chucky. Okay, Schwab.com, right there. So I click on there and I look at portfolio performance, the beginning of September to the end of September, and I can look at all the money that came in and what percentage that was. Okay, we have like 3 people, I think, at the moment. Now I've paid 6 people to figure out this. Hold on. To figure out this mess. Where is it? Right there, and account and this right there. There we go. Okay, you see that crap right there? That is called the cash sweep vehicle. Every single trade that's going right there, all that crap. Okay, here's all the fees. Here's some more fees. Here's the profit and losses, and here is the outstanding balance. Now I paid 6 people already to try to figure this mess out. Okay, anything that goes to TSLL, I want in one little category. Okay, I buy a stock, great. What did I buy it for? What profits came in? What dividends came in? What premiums came in? All on that one stock. But no, Thinkorswim, man. Chucky takes all the money that I make and throws it into one little basket. Well, how the hell am I supposed to know what I make off of each one? You want me to do it by hand? Do you see this crap? This is not even 30 days. You try doing that on 7 different accounts for the whole year. Yeah, no thanks. I paid 6 people to do it. No one has come up with a spreadsheet that can calculate all that crap as of yet. But we got 3 more people actually working on it. So how do I track my money, my profits on Thinkorswim? I can't. There's no way of tracking the profits other than, you know, the overall profit and loss. What are the 5 things you look at on a chart? You ready? High of the year, low of the year. Where was it a year ago? Where is it now? And what's the motion? What's the flow? Where is it going? Okay, up, down, up, down, up, down. Simple. IRS code book. Yep. Tim or Scametti. Okay. My favorite dividend pair is PLTY. Patrick, I'm terribly sorry that you like PLTY. It's only because you didn't look at the numbers for PLTY.